Good day, everyone. Today is December 16th, 2025, and this is part number one. In part number one, we discussed the general view of the markets and we shed some lights on where we think they're headed in the near future. As usual, we start with gold. We can see here the daily chart of gold. And what's been happening lately, what happened is kind of significant here. We can see that yesterday the market tried to rally towards the all-time high of 43.81. However, it got to about 43.50, and then we can see the green bar here yesterday closing near the low of the session, not even in the middle. And now today we're continuing to trade lower than yesterday's low. So clearly now we started the direction back towards support, which is now 4,085. This is here, the yellow line, the 50-day exponential moving average on gold. That's where we believe we're headed. It may not happen this year, even though it's possible, but we still have another month because we're using the 3 months idea that the markets will go sideways after the rally and the big drop, typically 3 months worth of sideways before we can rally to a new high if we're going to. This has been the history for the last 3 years, and now it's only been 2 months since the peak of October 21st. Okay, a little bit less than 2 months, about 7 weeks. So we still have about 5 weeks to go before we consider a possible run to the high. This is based on history, of course. No one knows for sure. We just like to follow the best probability. Gold has been moving within 61 points a day. This is the average move from high to low. And now we will move to NASDAQ. NASDAQ has been under some price pressure here. It's already in the support zone, which started at 25,000 down to 24,000. So we are in the support, maybe revisit the lows from the end of November, even though I find it unlikely. I think they'll find plenty of support here in the middle of this channel, maybe at 24,500, worst case, because equities have plenty of defenders, especially towards the end of the year, okay? There's nothing new on the table as far as news. As far as economic news, interest rates, everything is pretty much on the open. And this year is about to finish. This was a good year, up almost 20% on NASDAQ, up something like 15, 16% on the S&P. They will have plenty of defenders to make sure this year ends close to the highs. That's what we believe. Again, based on history. NASDAQ moves within 400 points a day. S&P moves within 70 points a day. That's based on the last 9 days. This is the average move from high to low. These numbers are very important. The average range comes into play because lately the markets have been more sideways, if anything. More sideways than trended. Only the day of the Fed or the day after was a trended day with big moves beyond the average range. But for the most part, the last 3 weeks, okay, we have seen the markets move within the range. So keep in mind, we expect the markets to continue to move within their ranges. So they will likely move within that 400 points on the NASDAQ, 70 points on the S&P, and 61 points on the XAU. That comes in handy because when you see the market up, say, 60 points or near it on the XAU, you know, when you're up that much, you might want to take some profits off the table for that day or abandon the buy. Because more likely than not, we are near the highs of the session. Same thing for the NASDAQ. If we're up or down 400 points, that could be it, if you will, okay? There'll be some exceptions, of course, but we are in a sideways environment. Whoever is chasing is likely to lose. Markets drop, you sell, you find yourself behind. Markets rally, you buy, you find yourself behind. That's the environment we're in. So you have to adjust accordingly. Anyway, we'll come back today later at 9 a.m. Eastern time and discuss the best course of action for today, whether it's going to be bullish, bearish, or sideways. Until that time, I wish everyone the best of luck and thank you.